Well, hello and welcome today, this morning, good evening, wherever you may be tuning in from. It's my pleasure, Dave Russell from Veeam Software as Vice President of Enterprise Strategy, to welcome my great guest, Michael Araneta from IDC. He's an Associate Vice President in Financial Insights, and Neehar, Vice President ICT and a Chief Information Security Officer from 63 Moons Technologies. Before we go any further, gentlemen, thank you so much for joining today.
Thanks, Dave. Yeah, nice audio setup there.
Well, thank you so much. And shout out to you as well. And you know what I want to do, because I just feel like almost 2 years into this current world situation, we've all been inundated with various kinds of podcast, webcasts, etc. So I want to keep it extremely interactive. I do have some slides which are comprised from, many of us. However, the whole goal is to absolutely keep this interactive, absolutely keep this informative. So without further ado, what I want to do though is just give a little shout out about the webinar itself. If you're muted on entry if you've joined us. However, feel free to give a comment in chat. I'm going to be monitoring that. I have a team that's also going to be monitoring that. If you have a question, use the Q&A or chat function. This webinar is being recorded, so if you're uncomfortable with that, of course, feel free to disengage, and feel free, of course, to watch it at a later time. We will be posting this recording and the presentation post-webinar just after the event. Now, before we really get into it, Michael and Neehar, earlier today, my time, so I'm going on, let me quick time check. It's about 8:30 p.m. my time, approximately 14 and a half hours ago. Veeam introduced a report or updated a report that we call the Data Protection Trends Report. We've been issuing this now for a few years. I'm just going to share with you, but one slide before I turn over to you, Michael. But Neehar and Michael, I just want just to tee this up. I appreciate this looks like an eye chart. I promise it's not going to be a quiz at the end of this. I'm going to decompose this very simply. The question that we asked in what is the industry's largest ever data protection survey at almost 3,400 respondents is, which of the following would drive your organization to change its primary backup solution to something new, a new solution or a new service? Choose everything and choose the most important. Choose everything, as you might imagine, that's the further bars over to the right-hand side in the kind of darker green, the lighter green, which we've stacked ranked this by as choose what's most important. And there are no wrong answers here. So for example, Michael and Neehar and everyone else watching, you may say, no, I have a different view of what might be the most important driver. And that's, of course, perfectly acceptable. What I just wanted to convey to tee up our conversation is just frame this for our global audience, that when we think about now almost 3,400 respondents, what we really see are a couple clear groupings here on average. And again, not every organization is quote unquote average, but primarily what they're looking for is an improvement in their service level agreement as expressed by recovery point or recovery time objectives. We see a desire to improve the reliability or success of backups. And then you can see a number of, I will call them economic factors, be it CapEx to OpEx or return on investment, also total cost of ownership, as well as things like reduced software hardware costs. But with that as a backup, Michael, what I'd love to tee up to you, you've got a great slide. I think actually we've got 2 slides for you. Please walk us through these trends that you've got for this year.
Right, yeah, so it's also a very interesting time, always at the beginning of the year, as we really look at the upcoming phenomena that we are expecting in the world of financial services. So these are some of the big trends that we identified as we really looked at what are the trends for the upcoming year in 2022. I mean, I think we're speaking to you 2 months after we did this like massive reflection of where the industry is headed, especially in what is supposed to be the recovery year for financial services. So I'm speaking particularly for the Asia Pacific region, where, for example, we're looking at a digital deluge that has really emerged over the past 2 years. At the beginning of COVID-19, I was speaking to, as I usually do, with the CIOs and all these technology decision makers, and everyone was complaining about how they were suffering through a growth of 50% in terms of new transactions, but also in terms of their transactions that they had to support. 50% was a complaint at that time. 2021, it grew to 70%, even from a much higher base. 2022 looks like it's going to persist. This close to 100% growth in digital transactions and digital interactions, which actually means that more and more of our organizations are really hard pressed to support not only greater throughput, but also to ensure the availability and the service reliability of all these digital transactions. What complicates this is the first bullet point down there, which would be the new types of customer interactions that are emerging. And these are not just a growth in numbers, but in terms of the growth of the types of interactions that have emerged. These interactions are not your traditional account inquiries, for example, but these are interactions that require a lot of data for the service agent, for example, to serve the customer so that that service agent can be able to give recommendations and advice to our customers. There's also new products and new channels that are being launched, more and more of them, quite interesting, at least in terms of how they're able to merge both physical interactions, face-to-face interactions, as well as digital interactions too. The second point, I think, we'll go deep into all of these trends that we are expecting in 2022, is this work from home phenomenon. This was the phenomenon of 2020 as we were grappling through COVID-19. But as we are seeing some form of recovery, we are seeing that more organizations are going to be back in the office. But then you see an escalation of some COVID cases with new variants that are emerging, so that there has to be a quick decision made by management or made by operations to allow organizations to move back to work from home or move back to the office on a day's notice. That seems to be the benchmark for return to office. So RPO, we're talking about recovery time objective. RTO, we're talking about recovery time objectives. But there has to be a return to office objective as well, RTO, which can be quite an interesting trend that we are seeing. Cloud is the third one, and I think that it's in the middle there for maybe an ironic reason that more and more of our strategies are really centered on cloud. 85% of tier one institutions are building capabilities to curate an infrastructure strategy that is essentially hybrid. It's not just multi-cloud, but it's the ability of specific workloads to be put on different environments, whether it's in one major cloud services provider, your on-prem data center, or the edge, which is another growth area that we are seeing. Cloud still is driving a lot of the investments of financial services institutions in the Asian region. Integration is the fourth trend that we are seeing, greater integration of all operations. There's also greater willingness of to work with fintechs, whether it is in collaborating on distribution or collaborating on product development. There would be a lot of opportunities for financial services institutions to connect to third parties. And hopefully these are trusted third parties that will take care of the almost the sanctity of the data that is in fact not owned by the bank, but in fact owned by the customer according to regulations that are emerging. And then the fifth one, app modernization. This continues. There's going to be a growth of the application portfolio of a typical organization. There will be a lot of retention of all these legacy type of applications, but there will also be a modernization of all these applications that are needing to be moved towards this digital era. What happens to the data that are attached to all of these applications? Those are some of the fundamental questions that hopefully we will address in today's discussion. And Dave, you're on mute, I think.
Thank you so much. It wouldn't be a pandemic if someone wasn't on mute, and of course it's always me. But I'm just going to pause just for a moment in terms of sharing slides, because I've got another great slide that Michael's offered. But Neehar, I want to bring you into the conversation. Just get your early reactions. As Michael said, we're going to double click on each of these. But just overall, how does this resonate with you, your experience as a data center professional, your business, and what you've experienced in this last, I'll call it almost 2 years of the pandemic?
Wow, this pandemic surely has changed a lot of things, not only with us, all businesses, and everyone has a different story to it. There's a lot of learning that most of our CIOs community we share. But overall, what we feel is there has been an explosion of data as the pace of digitization has accelerated. In India, the payment gateway scenario completely changed. We thought that digital payments would take 6 to 7 years, but in the pandemic, it just went rocketed because we were all locked home and online applications took over. Sensitive financial data needs to be protected and shared in a safe way that's in compliance with the regulatory environment. So these laws are becoming increasingly stringent in light of the rising cybercrime attacks. We saw around 800% more cybercrime attacks in the last year. So the cybersecurity threat landscape is evolving very rapidly, and the steep rise in cybercrime over the last few years. So in case of a zero-day attack, we need to be prepared with encrypted, no gaps, and a compressed data backup solution for quick restoration. And that's been a priority which has come out of this pandemic.
Interesting. And so, Michael, as we think about, I'll call it diversity of workloads, I almost feel like we're not turning off something. We're not moving from something and decommissioning things. It's almost like an and, meaning it's not this goes away and we move to the other thing. It's we have this superset. I mean, is that something that you see from your vantage point globally and, of course, specific to this market as well?
I was on mute as well, but yeah, we did a study on all these application portfolios of a typical financial services institution. 247 applications in a tier 1, tier 2 type of bank. Or financial services institution in the Asian region. I think it will be slightly similar in other parts of the world too. 247, this will grow to about 283. So you look at that as a big growth there as well. But there will be a lot of retirement, however, of all these applications. But there will be growth still, going from 247 to 283. Some retirement there, but it's not going to be retirement and then you let go of all those applications, right? What happens is that you are renovating them and making them more digital. There will be a lot of work in refactoring them to microservices so that they are becoming more modern as well. And then as you modernize them, you look at some of the ways that you can use cloud and host them on cloud. So I agree with you, Dave. There is that growth explosion of all these digital capabilities facilitated by this growth of application portfolios that a bank or a financial services institution has to continue to maintain.
Interesting. So I'm going to share a screen again. And please, of course, Michael and Neehar, shout out if I'm not sharing appropriately. But one of the things that we have seen.
You are sharing.
Oh, brilliant. So just published earlier today, we've got now 8,000 data points over 3 years. And, I'll tee it up, of course, to both of you. Neehar, I'll start with you, but let me give a little bit of a talk track here. What we see over on the left-hand side is that physical servers in the data center are declining, not going to zero, mind you, but declining. And what we see in the middle is that virtual servers were kind of leveling off, I will say. And then the growth happens to be in virtual machines in a hyperscaler or a service provider cloud infrastructure. And the reason for all these bars is we actually asked people 2 years ago, meaning 2020, what are you doing today? 2 years later, what do you anticipate? Then we repeated the question 2021, and what do you think you're doing 2 years later? And then the third time we repeated the question 2022, what do you think you're going to be doing? So in aggregate, we get 8,000 data points. What I think is interesting is I don't think anyone would look at this chart and go, oh my goodness, I'm surprised by these trends. What I do think, though, is that if we do a little myth busting in Neehar, here's what I'm going to pitch it to you. Some people like to think, well, the data center goes to zero and everything's going to be cloud. Or, even virtual machines is going to go to zero. It's all cloud. It's all cloud tomorrow. It's all cloud, in no time flat. Or, everybody's going to do something within the next 12 months. And what we see here, at least by 8,000 data points, is I will call it a hybrid mix. Is this consistent with what you see?
Definitely. So as we all know, cloud brings relief from the constraints of complex infrastructure support and offers previously unattainable levels of efficiency. But the cloud journey has its own perils and complications, some of them new and some retained from the physical world. So hybrid clouds are here to stay, and that's what we think. And hence our plan for future is also to have a secure cloud journey without compromising on protection levels. And this graph that you showed is exactly what is happening not only in our industry but across India and other companies also. So success in the clouds, we think it requires seriously assessing the fitness for use of different cloud platforms. For example, finding the right cloud for the right workload. You have so many options available right now, and relying on a consistent set of technologies that actually optimize performance and reliably deliver your IT solutions that meets an organization's need. But there are some applications which still need to be on-prem, and hence hybrid environments are here to stay. So we say, in fact, hybrid and multi-cloud environments are the present and the future of enterprise IT infrastructures. You get more control, lower latency in such setups, and quick access to your resources. What we need is a solution that provides a single platform for modernizing backup, accelerating hybrid cloud, and at the same time securing your data. So this is a trend that you have actually shown is the right one, and we completely agree to that, Dave.
Oh, interesting. I'm going to stop sharing for a moment because I just want to have a bit of conversation. I'll pitch it to you, Michael. If we've kind of talked a bit about diversity of workloads, and I'll call it diversity in terms of deployment models, meaning one thing doesn't win out over the other. It's going to be a potentially multi-cloud, hybrid cloud world. If we think about, unfortunately, we can't almost not think about the global pandemic. Work from home. I mean, many of us, obviously, Neehar is back in the office, and bless you for that. I envy you, and I welcome the opportunity someday soon myself. But Michael, many of us were thrust into a geographically dispersed scenario, in some cases a bit unexpectedly, meaning, quicker than we might have anticipated. And the implications from a security perspective, from a recoverability perspective, can be fairly dramatic. What are your thoughts on this whole instant centralization versus boom, geographically dispersed, work from home? And maybe that's going to be the case for some time to come.
Yeah, and it has complicated a lot of things, especially in protecting the data, its security, obviously, but also in making sure that the policies and the best practices and the governance mechanisms we had in the past can be fit in the realities of work from home in this dispersed work environments. It's obviously a very complicated task because look at the reality of like a typical staff or a typical executive working from home, sharing Wi-Fi passwords with the family, working on VPN, but also sharing access to the device itself with family members, for example. There continues to be the struggles of staff as they work around the practicalities of work from home. It could also be the practicalities of being able to work in the office when you're so used to working from home as well, right? I mean, that has to be talked about now when more and more executives like Neehar are back in the office. When they're so used to this work from home environment, and then they have to get used to this work from the office environment, it can be quite complicated very quickly too. But I think most importantly, the push around that of devolution or decentralization is also reflected in the decentralization of data. What do we mean by that, right? Decentralization of data that needs to be put in the fingertips of our executives and our staff working from home, as they need to be able to get access to that data so that they're able to make the appropriate decisions at the point when they are interacting with customers or when they need to make decisions very, very quickly as well. And so it's a very important factor that we really have to consider. How are we allowing our staff, our executives to have access to data? And is that access secure and safe in the first place? And are the decisions being hampered by all these governance that we used to have in those centralized environments? Are they really fit for this decentralized work and decision-making systems that we will have in the future? Obviously, a lot of reflection needs to be made on how we are fit, in fact, for this more more decentralized work methods in the future.
So I'm going to give a bit of a shameless plug and share again, and then invite Neehar in. And not Neehar, that you have to comment on my shameless plug. Here's just but an example, and I do mean, Michael, this is an example. Obviously, it's a Veeam example, but it doesn't even matter. Like, just consider all these workloads, right? We've got a lot of things here. We've got down at the bottom, I'll call it the traditional data center, be it the virtualized environment, and kind of the lower left, we've got file shares and unstructured data in the bottom. Middle, we've got the physical workloads that Neehar, you and I grew up with, and we still have to protect, by the way, in that lower right-hand side. And then we go up the stack. If you go to the top half of the diagram, we've got it, to Michael's point, increasingly cloud-based, cloud-native solutions, whether it's infrastructure as a service, software as a service. Now, you think about Kubernetes, born in the cloud or migrated to the cloud. All that aside, the point of this whole chart is there's a lot going on, right? I mean, I'm sure you and I, Neehar and Michael as well, we could even add more stuff on this chart, right? But the concept is that we have a lot of different integration scenarios, from a hybrid perspective, from a security perspective. And the reason I want to tee this up, and I'll stop sharing the slide and turn it over to Neehar, is I just think about data portability, cloud mobility. How do you get the bits where they're supposed to be when they're supposed to be there? As from your perspective, this changed in any way in the last recent couple of years?
Well, we were shifted to a work from home scenario in less than 48 hours notice. So very few people had work from home access in our company due to our IPR and the way we work in the financial domain and in the market. We had to make around 1,200 employees work from home within 48 hours. Yeah, and you could understand we had the sleepless nights for those 2 days, and it took a couple of more days for everything to streamline And from a very secured network that you had infrastructure, suddenly you had 1200 endpoints which are going to come in to our network, and each endpoint came from its own different. We do not use laptops. We have workstations and we have virtual machines, and everyone has to access it from their own laptops or cyber cafe or wherever they are traveling from. So that's security threat, because now the perimeter defense was still okay when people were inside. We had 1,200 people coming in from their own workstation. We needed to secure that, where we found that the password entering into our network was the weakest link, and then we took some uh, steps to do the put more authentication and make it more secure. But we feel that we have been shifting from this centralized to distributed and flexible operating environments continuously. The boundaries now between the living, working, and learning environments are blurred. That is the new normal. Work from home is here to stay, and that's what we feel, with 40 to 50% staff continuing to work from home. We also noticed that since this financial crisis, institutes have faced a tsunami of new regulatory requirements. With data becoming the most important asset for businesses, availability is key. In fact, the biggest challenge for 63 Moons is to ensure that our data is always available securely to our employees and our customers. At the same time, we have to ensure compliance and data security with the privacy regulations.
Interesting. So, Michael, if I tee it up to you, I mean, that's also obviously fascinating and almost terrifying, from a data center professional perspective, Neehar, because it just means all of our jobs got potentially more challenging, right? Work didn't go away, work increased if you're a data center professional. And so, Michael, if we think about application modernization, if we think about we're adding to the mix, we're not turning off things, to Neehar's point, we're expanding, arguably kind of horizontally our coverage matrix here. And that notion to what you spoke of earlier, I mean, who owns the data? Who's responsible for the data? Who needs to be the custodian of this? It feels like that situation is getting a bit more complex, not necessarily easier.
It will get more complicated. I mean, I think the regulations have really standardized on data ownership ultimately owned by the customer, right? And the customer has to give consent to the organization, the controller of the data, I think as defined by regulations, to be able to use that data in the first place. And this has to be also based on the concept of informed consent, which means that the data controller has to explain to the customer, the ultimate owner of the data, what the organization is going to do with the data and what uses and what benefits that particular customer will see from the use and the utilization of that data in the first place. And then you've got a whole series of complications around the relationship between the data controller and the data processor as well, right? With all these third-party relationships that are emerging. And this data is supposed to be also collected and processed on a real-time basis. I mean, you look at the digital footprint that you have of your customer as well, right? With the customers transacting and behaving differently. You start and also using a lot of these devices that give you the data exhaust. Suddenly you have a lot more information about the customer that you have to manage, that you have to make sure that it is secure, and that you also use, so that the use and analysis of this data will ultimately be beneficial to the customer, either to hyper-personalize the approach to the customer, the product or the service, or the offering to the customer as well. And so it becomes very complicated from that perspective too. I talked about this resurgence of integration as a theme, and this is reflected in the notions of open banking. Now, open banking also started in Europe, but is also reflected in many organizations across the world. It might not be regulation-led, but this is the ability of the organization to share applications, application functionality, services, and more importantly, data with supposedly the trusted third parties. Now, how are we going to facilitate that exchange of data between the financial services institution and these trusted third parties? Neehar was talking about the perimeter having been dissolved in your traditional infrastructure management, right? But the perimeter of the data management function of the organization has also dissolved as well, especially with these notions of open banking that have emerged very quickly. How do we facilitate that quick, real-time exchange of data with the trusted third parties? Who secures that exchange in the first place? And most importantly, who is liable if suddenly data is lost or data is breached? And who is responsible for remediation? Those are some of the fundamental questions that we have to resolve as we pursue this ecosystem-led open banking notioned world of financial services.
Very interesting, Michael. I love how you described all of that, actually. And Neehar, what I would tee up to you is, do you see this yourself? I mean, obviously, some of us, like myself, we're on the consumer side of financial services. We've all experienced to varying degrees, perhaps we couldn't go out, or perhaps we had to transition to more of an online financial, transaction system. Do you see that this has changed and affected your business as well? And what, if anything, did you need to do from a corporate perspective, an IT perspective, to respond to what I mean, I don't want to make it sound dramatic, but I mean, like, literally the world may be changed, right? We're probably not going to find ourselves in 2019, right? From a daily experience, from heck, even a travel perspective. But as it relates to financial services, I guess a two-part question. So now I'll net it out for you because I know I said so many things in the air. Do you think all this has
Yeah,
changed a
I,
bit?
I do agree. I do agree, and we are a software product company. Yeah, we are bread and butter comes from developing software for the financial market. So with this digital business transformation and a mandate to improve operational excellence, we feel out-of-box integration and APIs for seamless interconnection across the stack and co-opting of all IT roles towards operational excellence is required. Similarly, we need accuracy and timely control over integration and operations to concentrate on innovation and optimizing rather than managing the impact of issues on the business. So integration and operations has to be given priority. And with the explosion of data for businesses, there's also an explosion of audit log data, which has increased fourfolds for us. So not only we need policies for data pruning and data backup, but this will ensure that only the needed data is backed up.
Yeah, very interesting. And, so in a slightly different way, Michael, I'll ask you a very similar question, meaning from where you sit and just putting on our lens of financial services in the region, do you think what we've experienced, and pick your time frame, 18 months, 24 months, do you think this is an anomaly? Do you think this is kind of going to be business as usual going forward? Or do you think we fundamentally shifted, or we're going to somehow return back to a different time a couple of years ago?
We have shifted and fundamentally shifted as well, right? Because the customer is very sticky to the new ways of interactions, and that has to be the indicator of how we operate as a financial services institution moving forward. The customers are not going to go back to pre-COVID-19 way of interacting. There might be some anomalies here and there of maybe customers preferring to interact via traditional channels, for example, but that would be more an exception rather than the rule. And also our operations have fundamentally changed as well. I mean, if you look at the integration of different teams, fraud management teams working a lot more closer. This was expected and ideal, but this finally happened, but happened very recently, integration of fraud management with risk management and IT and security, that actually allows us to really realize that the organizations supporting financial services have also changed themselves. And then there's also the possibilities of technology that have also changed fundamentally too, that cloud supposed to be a no-no in our industry is suddenly the de facto architecture of our future. I mean, it was only about 3 years ago when the financial services institutions were told by the regulators anything to do with cloud will need to be looked at very, very seriously. But now look at that. 98% of our financial services institutions are growing spending on cloud. So from a technology perspective, from a customer transaction perspective, and then from an organization perspective, we are really fundamentally different from where we were prior to COVID.
Very interesting. And so I can't help but want to tee that up to Neehar. And, call me wrong, but I think of financial services in particular as being a reasonably risk-averse vertical or line of business, and for good reason, by the way. I mean that I don't mean that in a pejorative way whatsoever. But to Michael's point, we've shifted. I mean, consumers have shifted. Neehar, Michael, Dave, we've shifted. I mean, our families. Just think about it in our personal lives, what we've been through in the last couple of years, and how we do business. Do you also perceive that the world of financial services has been kind of pushed towards a more cloud-oriented reality, or what would be your thoughts on that?
Well, whether you're starting out now or uh, on your cloud journey, everyone has to move to the cloud. Like I said, we were hosted our services in our own data center, and we had people coming to office and accessing those. Once they moved outside for a work from home environment, our internal data centers were then connecting to cloud and getting in. But then we saw a double loop latency which was happening. It was easier for our employee to connect to the cloud with a faster latency, then come to our data center and then go to the cloud. So the entire architecture, we thought of redoing it. Then we thought, instead of using our data center, why not host their machines on the cloud so they have a direct access instead of taking a dual level loop. So we feel that it's whenever everyone has started the journey to the cloud, it's likely that you may face cloud first mandates for digital transformation initiatives, from moving production workloads to the cloud to leveraging an offsite cloud target for long-term retention or disaster preparedness. Backup and recovery is something that we got into the forefront, which was there. We had offline, offsite backups that we had, but now with the cloud journey, we having hybrid environments in the financial sector, we started looking at it at a completely different perspective.
This will be a portfolio approach that we really have to look at, right? Because the reality of financial services is that there will still be some legacy applications hosted on the data center as well, right? And there will be a migration to cloud, yes, but there will still be some applications that are very hard to modernize and therefore will be on our data center. And then we've got the operational data stores that are really quite hard to migrate away from, right? And therefore you need to look at it as a portfolio of data stores that where data moves from one environment to the other. That would include data center, operational data stores, data lake that might be on or off cloud, some of the data stores on cloud because they're primed for analytics on the cloud, on this high velocity type of analytics as well. So this is all about management of all these application and analytics and data portfolio that you have, and then have that blanket approach to be able to secure them, ensure service availability, and then recoverability if something goes wrong. So it's going to be an interesting journey that I think more and more of our executives have to take, and there will be an assessment of what needs to be prioritized first, and then how exactly are we going to optimize the approach for these different environments that we are going to manage.
Yeah, and I really like what you said there. I mean, so many things, Michael, but I love the notion of prioritization because, for over 3 decades, I've always maintained from an availability perspective, people can get overwhelmed, organizations can get overwhelmed, and they can almost get into this bit of being paralyzed. And so what I like to say is, okay, you may not be able to do everything, but you can do something, right? And so to your point about prioritization, Neehar, if you could scope it down, if you can just sort of grab the tiger by the tail and just say, what do I really need to do that would make the most impact? Of course, we would like to do pick your number, 100 things, 1,000 things to Michael's point, but let's just start somewhere with the high priority things. Let's make improvements there. I feel like that's good practical advice, Neehar. Start somewhere.
Yes, so the priorities have changed. Largely, it was expansion earlier, before last 2 years. And to keep it short in one line, I would say this year's budget is completely focused on security and availability solutions. What that means is we would like to have more security because the environment is now getting into a hybrid uh, uh, way of doing it. The cloud service providers guarantee you some level of security. You have your own security, but it's the data in the middle that transits between the hybrid environment. So we are looking for more security, and having such a diverse hybrid environment, we are looking at availability solutions as the highest priority for us.
Yeah, interesting. And, Michael, I swear I didn't, pay Neehar to tee this up, but I will mention a notion on, I'll call it the budgets. What's interesting is, again, going back to this survey that Veeam published, which is not a Veeam survey, by the way. I mean, nobody knew it was Veeam. We published it blindly through a third party. But here we've got almost 3,400 respondents. And what we can see here is that on average, and you can see, some are higher, a little bit lower, but actually to my, I guess, delight, Neehar, many are much higher than the average of almost 6%, just under 5.9, but let's round up to 6 just for even numbers. But, the point I would make, Michael, is that overall IT-wise, what we see generally, and I'm just quoting IDC numbers, is across all of IT, approximately 3% uplift in IT budgets is what we could anticipate if we were to smooth this out across all, different domains, disciplines. And what I like seeing here is that it's approximately double, all right, a little bit here and there, but, just general numbers, right? It's almost double. And to me, I would like to read in so many things into this. And of course, maybe I'm mistaken, meaning I could be playing pop psychologist or something like that. But I think what we're seeing, Michael, and I'll turn over to you first and then Neehar second, of course, but I think what we're seeing is a recognition of, unfortunately, a bad thing, cyber threats, meaning ransomware, being something that is a catalyst for increasing data protection budgets, but also this notion of workload expansion, workload deployment models increasing in organizations, saying maybe we haven't kept up. Maybe we need to better address what we've been doing. And to your point earlier, Mike, about needing availability, maybe what we're seeing is now a bit of a catch-up period. That's my thesis anyway. I'll turn it over to Michael and then to Neehar.
Right. Yeah. So that 5.9%, double the average that we are seeing just for IT budgets is one thing, right? But what I think needs to be talked about is that the numbers are impressive, but the drivers for that spending have really multiplied as well. So it's not just about maybe the recoverability, maybe it's not just about availability, but it is about service assurance for the customer. We realize that this is very important to the customer. We also are motivated by making sure that we are compliant with all these diverse regulations and guidelines coming from our regulators about what really constitutes good customer service, and what do we define as continuous service for our customers too, oriented towards the customer experience now as well. I was looking at the numbers for Australia. The big four institutions there, for example, are seeing 50% of their IT budgets allocated towards compliance, right? And governance, risk, and compliance as well. Motivated again by making sure that the customer is served, because that is the charter of financial services or organization. The other driver that we are seeing, of course, is that this is strategic to the institution itself, right? I mean, look at downtime that is resulting to multi-million-dollar losses, opportunity costs, but also fines, and also some of the impact around that of remediation. This is the ability of the organization to continue to work and operate is very critical to the business itself. And so the numbers are in fact quite impressive and something to be really excited about. But in the nitty-gritty of financial services institutions, in the real world of financial services, these are motivated by different things and a host of different things happening all at the same time.
Wow, very interesting. Yeah, well said, Michael. Neehar, what are your thoughts? Do you actually experience, in your daily life, your business, that there's an increasing recognition of needing greater availability?
These figures that you show are not surprising. My budgets for data protection, including business and continuity and security of endpoints, has this year, we are earmarking our financial year starts in April. We just finished off one round of review of our budgets and we have increased it by 20%.
Really?
Yeah, and last year it was 10%, and that was on the fly because we wanted to have a AI-based automative response system in case there's an attack, right? The ransomware threat here in India is very, very high. And in case you are hit, we look for solutions which would actually, in case you're hit, there's no way of paying a ransomware. So you need to format system and restore. You need to restore critical systems, not so critical system, and then also now people have realized that their own personal data is also critical, because for them to get back to work, if their data is compromised, it would take them some time, or the organization's data if it is compromised. So we have earmarked around 20% on this year. We have a completely different change that we never envisaged 2 years back that we are going to do on data security and backup strategies.
Wow, I mean, Michael, I've been in the industry a little while, and when I hear someone say that they're, rough math, 6.5 times the global average, that's statistically meaningful. I mean, that's pretty significant.
It's significant, but also it's not a rare occurrence to really take this seriously, right? Because there are, again, a lot of drivers and all these motivations are really changing rapidly as well. But you also have to recognize that all of this is done with well-meaning organizations, right? That organizations that are not just really looking at spending just for the sake of spending, right? They are doing this for a reason, to ensure that the customers continue being served, the executives, the staff that need to serve the customers have access to their tools and applications and capabilities, but that this supports the change in the organization, the change for good, to be digitally transformed, to be fit for this more digital era that we are in, and to continue operating as a business, right? And so I think this is a good reckoning in our industry, that we need to make the right investments for the right reasons.
Wow, brilliant. And, as we begin to wind down, thank you, of course, Michael and Neehar. I want to turn it over to you and just invite you to share maybe some of what your experiences have been as you've gone down this journey with Veeam. What have been some of your results?
Well, 63 Moons technology has always been a pioneer in leading edge technology. And most of the systems that we use, we have always been the early adopters in the country. So is the story with most of the solution, from security to video conferencing. It's like Zoom is something that we started in India 5 years back, was the first companies. And for Veeam, we are one of the first early adopters of the technology. We have 20% of our staff doing proof of concepts on different technologies, just to ensure that the best is what we have. And we have been a long using partner of Veeam Solutions. And we found that improvement in productivity for the IT team over at the administrative tasks have reduced using this. The best thing I found is your duplication and compression algorithm saves us a lot of storage space, resulting around 90 to 95% of compression. This very less earlier. We have reduced the entire backup window, which was 18 hours, and then we were horrified and scratching our heads. What if it crosses 24 hours? New data coming in and your backup windows going above 24 hours is a disaster. So with your solution, we could get it down to 6 hours, and that completely gave us a good sleep over the weekend. And with more and more features that get built in at regular intervals, we know that our decision in choosing Veeam has always been right. Yeah. It's a very powerful, easy to use and affordable solution across all clouds. We use all the 3 clouds variant from Azure, AWS, and GCP, and a hybrid solution, and it fits in for us completely in all the 4 environments.
Outstanding. I'll do a quick share again, and the reason why is just want to invite people to click on a URL or a QR code rather here. I've mentioned this report that published about, going on 14, 15 hours earlier today, the industry's largest data protection report. Here's a QR code that you can download this report if you're interested in that, and I highly encourage you to. But also, I want to give a huge shout out to Michael and to Neehar. Here are QR codes if you'd like to interact with all of us. Definitely want to thank Michael so much for sharing your time, Neehar, for sharing not only your time, your stories, being very forthright in what you've had to say, Michael, with your industry observations. Thank you, everyone, for tuning in. Be sure to check out this report. I'll just back it up again, just in case you didn't get a chance to screenshot that. Be sure to check that out. And of course, here are the 3 ways you can contact us. Michael, Neehar, thank you so much. Thank you, everyone, for tuning in. And we really encourage you to check out more of IDC, what Neehar's company is doing, and Veeam as well. Have a great rest of the day.
Thanks a lot, Dave. Thanks, Michael. It was really interesting talking with you guys.
Right, thanks.
Thank you all.